So I think Madhu talked about why India looks exciting. I think I'm going to focus on, when you look at India, why you should look at Reliance. I think just one thing I would like to add to what Madhu said. Fortune always favors the brave. And the biggest positive which has happened for India in the last 3-4 years is the sharp fall in oil prices. So we all know that oil has fallen from $130, $140 to $50. And what interesting part about that is that last 30, 35 years, wealth has been transferred from oil consuming countries to oil producing countries. We were paying more for the same oil. I think the reverse wealth transfer has begun. On an annual basis, we consume 35 billion barrels of oil, which is roughly, the fall is equal to almost $2 trillion. So $2 trillion every year is now being transferred back from oil producing countries to oil consuming countries, of which India is going to be a key beneficiary. So just coming to the process, people and investment approach, and why we believe that being on the ground, being such a large organization as Reliance, we are in a better position. That is what my attempt would be. So just to give you a perspective, India is very diversified. It's a large country. And it's a country which is, basically run by entrepreneurs. It's more despite the government rather than because of the government. And we have huge number of small listed companies, almost 6,000 listed companies, almost 2,500 regularly traded companies. The other aspect about India is that we are behind the world by 15, 20 years. And in fact, that makes our lives as investment managers easy, because what has happened in other parts of the world is ultimately going to happen in India. So, you have new sectors come up. Just to give an example, in early 1990s, we did not have any sector called IT services. Today, India is known as the #1 destination for outsourcing as far as information technology is concerned. Infosys was listed at a market cap of $20 million. Today, the market cap of Infosys alone is $30 billion. And IT services as a percentage of the market cap is roughly 10%. The same is the case with telecom, which in mid-90s, we did not have a cell phone market in India. Today, India is the fastest growing cell phone market and the second largest cell phone market in the world. Same is the case with real estate, retail, e-commerce, hospitals, healthcare, and so on and so forth. So I think what we are trying to convey is that, one, we have a larger number of companies. Second is we have a huge number of upcoming sectors. And these upcoming sectors, when they come up, they necessarily start small. All this means that we need to have a very, very strong in-house research, because we have seen that the sell-side research guys would only cover the 50, 60 larger companies, and I have a slide on that. And you will miss the big alpha unless you start to track the companies in-house from day one. So I think we are one of the largest teams on the ground, almost a 35-member team comprising of asset managers and analysts. We have a macroeconomic team. We also have a quant team, which apart from Indian companies, also tracks global companies. And the idea of tracking global companies is not to basically invest abroad, but the world is flat, to get the trends. And a lot of times, we are able to, make a lot of returns just because of analyzing these trends. And I have one example which I'll share later. So as I mentioned to you earlier, this is a chart. So almost 48% of the listed companies in India have zero research. Only 10% of the companies have research of more than 10 brokers. And this is where my point of having a strong in-house team comes into play. So, unless you are onshore, you will not be able to track almost 90% of the market. You will be saddled with only the 10% of the market, which is widely covered. And I think this is where the huge alpha, which Madhu mentioned about 90-time returns in one of our flagship funds, comes from. A small bit on Reliance Nippon Life. We are now 51% owned by the Reliance Group, 49% owned by Nippon Life, which is the largest life insurance company in Asia, managing almost $600 billion. As I mentioned to you, one of the largest onshore asset management company. A lot of focus on process, a lot of focus on risk, and a lot of focus on long-term wealth creation rather than being more like a hedge fund. Again, Spike had this chart just for the sake of repetition. It's up 90 times in the last 21 years. It makes it one of the best performing funds, not only in India, but globally. Some examples, this is one stock which we have in our portfolio for the last 10 years. So we invested when the revenue was 247 crores, all less than $50 million. As we speak, the revenues are inching more than $500 million, and the market cap from 282 crores has moved up 100 times to almost 28,000 crores. We still own almost 8-9% of this company, and this clearly shows that if you have a long-term vision, the opportunities can be huge. Another company, TVS Motors, just a small bit here. India is a large two-wheeler market, the largest two-wheeler market in the world. It's a four-player market. We have Hero, we have Bajaj Auto, we have Honda of Japan, and we have TVS Motor. Between the four, they own almost 95% of the market. And this company, despite having a 15% market share, used to trade at like 1/20th of the two other players. And the only thing missing was an uptick in the margin profile. And we were tracking it very, very constantly. It was a small cap at that point of time, despite being a large company in terms of sales. And I think the moment the margin trend started to tick up, the company has just zoomed. It's up like almost 10 times in the last 4 years. Again, the highlight is that we need to track companies before they become large. And there will always be a tipping point, which if you're able to identify at the right time, you will make a lot of returns. And I think that is where being onshore and having a large team of analysts definitely works. There are a few themes. Madhu did have one slide. I think what I'm going to focus on is a couple of opportunities. And there are two companies which you identify being in the United Kingdom. One is obviously Diageo, the largest spirits company in the world. So United Spirits is now majority owned by Diageo. And I will also blend what I mentioned to you earlier about tracking global companies. So as I mentioned earlier, we on a passive basis track 20 countries, 2,800 companies, and these are all passive numbers taken out from Bloomberg. And in one of our regular sort of presentations, we realized that the market cap of spirits company globally was a multiple of the cigarette companies in each of these 20 countries, except in India. In India, the largest cigarette company, which is owned partially by British American Tobacco Company, had a market cap of $40 billion. And the largest spirit companies, United Spirits, before it was taken over by Diageo, had a market cap of only $1.5 billion. It was like a no-brainer. You have 15% of the world's population, 25% of the world's young population, and you have a 50% market share company available at like a $1.5 billion. So this was a broad trend. And obviously Vijay Mallya, whom I'm very sure most of you are familiar with, was the owner of this company, and he had huge problems. So our call was that if the problems were sorted out, the company would double. If the problems would not be sorted out, the company would quadruple because he would have to sell it. And I think that is what happened. Diageo is now the majority owner of this company. We have it in our portfolio. It's not doing well in the last 1 year because of regulatory reasons and because also of the demonetization issue. But just to give you a perspective again, 25% of all mankind born after 1st January 2000 are Indians, and they have still not come in the drinking age. The second thing is drinking is now becoming socially acceptable. We are a very conservative society. Drinking was not supposed, social drinking I mean, was not supposed to be desirable. Now, because of the young population, because of an open society, more and more youngsters are drinking. And the other thing is that this company makes only 3 rupees per bottle as profit. 3 rupees is 1/30th of a pound. The manufacturer of the empty bottle makes more than that. And now we have Diageo, which is managing this company. So you have technically, 15% of India's population, 15% population of the world, 25% of the young population. This company has 50% of market share in India. So technically, 12.5% of the world's young population is catered to by this company. And this company is available at a market cap of $4.5 billion, which is 5% of where Diageo is trading at. So I think the possibilities are immense. near term, because of demonetization, people will not have cash, so in the next 1 or 2 months, maybe the demand will not be as high. But if you're taking a view of 5, 10 years, we are very sure that United Spirits market cap will be more than Diageo in times to come. Similar is another company. You are all familiar with Sky TV. We have the largest DTH operator in India, Dish TV. The company has a market share of almost 16% of all TV households. So they are catering to almost 20 million households. And the ARPU, which is average revenue per user per month, is only £2, vis-a-vis Sky, which is having a ARPU of almost 30 to 40 pounds. So on one hand, you have a huge population which is still not, which still does not have access to cable TV or the DTH, and you also have a scenario where your ARPUs can go up meaningfully. Again, this company has a market cap of roughly $1.5 billion. We are very sure that if you have a 5-10 year view, you will have this company having a much higher market cap. So I think what we're trying to do is marry the long-term trends, but focus on companies which are market leaders, which already have a strong balance sheet, which have decent earnings, but where the surprise element can be much higher than what the street expects. So I think this was a short presentation on where our capability comes. So just to recap, I think India definitely has a lot of potential. As Madhu mentioned, we are definitely going to $4 and $6 trillion in economy size. We have to have a country focus, because if you are diversified across countries, for every one country which will do well, another country does not do well. And therefore, if you see the last 5-6 years, emerging markets as a package deal has not done anything. But within the emerging markets, there have been some countries which have done really, really well. And I think having an onshore fund manager makes a lot of sense, because that is where huge alpha opportunities can be tapped into. And we believe that with our track record of 21 years, with our a large team onshore, with a very stable team, we are well poised to it. Thank you.